Good morning all and welcome to today's video. So today I have four pairs on watch and those are Swiss yen, dollar CAD, Aussie dollar and dollar yen. So I'm going to break them down for you now. My favorite of the bunch is Swiss yen, so let's break that down for you now. So on the daily chart, you can see if we just scroll left, I'm going to do this because Swiss yen is at an all-time high at the moment. Okay, and we've just been sort of correcting our way up with very little structure. And then in this area here, we get some kind of structure and psychological patterns, which are typically what we see. Okay, so we're not just going to trade into corrective mess. We're going to wait for structure to form that we can make sense of those of us who trade the Falcon strategy before we look to get involved. And what I see here is I see an all-time high. Okay, this is what stands out to me, what I've learned to see. I see an all-time high. We come back up. We near miss to an area, which implies that this is an area of value and that when we sell off from here, we will likely find our way back up to take out the high, which we near missed to. As I've said previously, if we get close to an area of value and we start to sell off, then the orders that are still in this area and the orders that are being placed there whilst people are trying to sell this often causes price to come back up to tap into the area, and on the higher time frames usually break above before we see the bigger moves to the downside, especially when we're at a significant high, such as an all-time high, okay, in particular. And what we typically see is price breaks above. We usually see some momentum once we break above because many people think that what was previously resistance becomes support once it's broken above. So they start buying. But as I've said in the past, if they're buying, where are they getting out? Okay, this implies that this is just the amateurs buying because the professionals, generally speaking, have a plan as to where they're going to get out. And I can't see anywhere to the left where you would be looking to get out, and that just gives me the impression that this is people that don't know what they're doing, buying the highs as they typically do and selling the lows. Okay, and one of the reasons that so this is what we call catching people or potentially catching people the wrong side of the market. And one of the things that makes me think that we're likely to sell off, maybe not necessarily now, but in the very near future, is because we have a series of near misses. And what I mean by that, I've just marked them on. We have a kind of a bit of a near miss to here. Price gets close, but doesn't quite tap into it, and then we have an even nearer miss to this low here, and another one to this low here. Okay, so when we see these, typically speaking, price will at some point take these out. Okay, and the more near misses we see to a previous low, and the same applies on the flip side, the more likely we are to take these out. Now we have to remember, if I just zoom in a little bit, you can see we've kind of scooped back up. Okay, now I won't be looking for a break just below this high here, because if we broke just below here, we would still kind of be retesting this area of value. And we have to remember which one are people paying, which one are the bigger players paying more attention to. Well, if we just zoom out to the weekly, this is the high that stands out on the weekly. That little high you see there isn't even visible on the weekly chart. So this is the more significant one, which is why I have that marked as my area of value. Okay. So what I'll specifically be looking for from this pair is I won't be looking for a break below here. I'll be looking for a break below the area of value to confirm the move. I'm not really bothered about this because this was just a near miss to here. But if we break below, okay, so this may not happen by the end of the day. It may not happen by the end of the week. But if I just, what I'll be looking for in particular is I'll be looking for a dropout below, let's zoom left, below this high here, this all-time high. Okay, and then I'll be looking for the correction afterwards. And as I said, typically speaking, the impulse down would have kind of given me the clue that the buyers have got themselves caught the wrong side of the market, and then the correction afterwards would confirm that this is usually the bigger players stacking their orders for the next wave lower, and then I will be able to manage this trade down to this first low here for something in the region of 7 to 8%. And of course, if I got a risk entry within the flag, which would tighten the stop loss, then the risk to reward would increase. But as a minimum, I will be looking for the reduced risk entry on the break of the flag and looking to target this low as a first inflection point. And then if we just zoom back out, which is what a lot of traders don't do, by that point, we would have retraced all of this 4-hour candle here. We would be trading, as I say, back below here. By this point, the daily, if you could, we would have retraced about 50% of the length of this daily candle as well, and I think that would well and truly open the floodgates. Whether this happens by the end of the day or whether, if price just keeps trickling up, then I'll just leave this pair alone. Trading's quite simple. Know what you're looking for, know what you're not looking for, and if the market doesn't provide the entry, then just leave it alone, which is what a lot of traders can't do. So I have an alert set there just to see if we push back below this high, and if we do, then I'll probably set another alert a little bit lower to see if we can push below that, to see if we can push below the area of value. And that's what I'm going to be looking for from that pair. So dollar CAD. So dollar CAD, I think this looks a bit less likely by the end of the day. But as I said in yesterday's video, it's not about what I think it's about knowing what your entry criteria is, and regardless of whether you think it's likely or not, making sure that you're ready, making sure you're prepared, because in the space of one candle can change everything. Okay. So on the higher time frames, we have near missed this high, but as I've said, not all high. As I've said previously, not all highs get taken out straight away, and you can see that we're clearly in a run of momentum. So what we could be seeing a move down to here, which is why I've got my arrow there, before we see that move to the upside, and then we end up with this kind of 1, 2, 3 structure, where this becomes the kind of middle section. Then we tap into that high there, and then potentially we sell off again from there. But we shall see. But you can see we have tapped into an area of significance there, okay? And we did so even on the weekly. You can see we did so by way of a 1, 2, 3. Second touch breaks above the first touch. The third touch of that structure breaks above the second and taps the area of value, okay? And then we sell off. What have we done subsequently? We have blasted through this low. So if we were going to take out this high from here, then we would have likely reversed from that area. Instead, we just blasted straight through it, implying that there was not enough liquidity here to send price to the upside, and implying that this is just a scoop back up to tap into the area of value. You'll see it as I drill down before a sell-off to take out this near miss, which this low, which this near missed too, right? Easy for me to say. So as I drill down, you can see the consolidation there. So we broke below here. Price left a bit of a footprint. There was an area of consolidation. We did tap into that area, but we tapped into it by way of a bullish wick. And I've said previously, in particular, these candles, when you see a candle like this, big bullish candle with a big wick above it, these more often than not get filled. So price will come back up to fill the bullish wick before the sell-off. And if you think about that logically, I was thinking about this, I think it was yesterday. For many people, these bullish candles are a signal to get long. Okay, now, so if that's a signal for people to get long, then many people will try to sell this from here. While this signal to get long, it's causing many people to buy it, and of course, the wick sat above is where a lot of stop loss orders will be. Okay, even if people had their stop losses here and they moved it to break even here, this is where a lot of orders will be. So this candle here would be a signal for a lot of people to get long. The stop loss orders will be here and the limit orders, and that's perhaps explains some of the logic behind why those bullish wicks get filled. As we drill down, you can see we have another one. We have a bullish candle with a big wick above it. What is price doing? How is it moving down? It's moving down correctively. It's not moving down impulsively, implying that some people are trying to sell this, whilst these bullish candles are causing many people to get long, and perhaps the liquidity which is still in this area or sat just above it will likely cause price to gravitate back to that area to tap into the high before the sell-off. Okay, and then this becomes the middle section. So with that in mind, what I'll be looking for, and as I touched on previously, we have another one, a bullish wick there as well. Okay, so we see the same candlestick patterns on multiple time frames, and what I'll be looking for today with all that in mind is the following. I'll be looking for price to tap into the area of value, push down and then flag, and then that would confirm to me that the bigger players have stepped in, and that the correction afterwards would be likely the banks stacking the orders for the next wave lower, and then I will be able to manage it. Of course, we haven't rejected from here. If we were to push up from here, then I'll be able to manage it down to here as a first target for something in the region of 3 to 4%. On the 4-hour chart, what would that look like? On the 4-hour chart, that would look good. As I said previously, the 4-hour chart holds a lot of weight because these highs and lows are made up by an entire session's worth of candlesticks, okay, an entire session's worth of price action, whereas the 1-hour chart isn't. So by that point, look what this would look like on the 4-hour chart. What would it look like on the daily chart? On the daily chart, we will be back below that consolidation, okay. So that would likely open the floodgates. So that is dollar CAD. That's what I'm going to be looking for from that pair. As I said, we're kind of moving away. We may correct our way down, tap into that low before we push back up. We shall see. But that is dollar CAD. That's what I'm going to be looking for. Let's move on to Aussie dollar. So Aussie dollar to some extent almost looks like the inverse of dollar CAD. But one of the reasons this is lower down on the list is because we have a sharp move here followed by a sharp move up, implying that there was liquidity there, and we did tap into that by way of this reversal structure here. However, notice with dollar CAD that we have rejected from an area of significance, whereas this low is not as significant. Okay, but we've pushed up. What did price do? We have a near miss here to these highs. So price got close to those highs and it sold off. We then scooped back down, and these scoops are often an indication of a move to the upside. Okay, so if we just blasted down like that, I wouldn't be looking to get long on this pair. But because we've scooped back round, that implies that volume has been built here, which potentially could be the catalyst to take price up to these highs. Okay, so as we draw down, you can see I'm just seeing this as a volatility spike. I touched on this previously. This happened when red flag news data came out. Okay, and I'm just seeing this as price correcting its way to this sharp hook point there. Okay, there was a sharp move down followed by a sharp move up, implying that there was liquidity there. We even have this structure here. So we have volume, okay? Price is looking for volume. It's always seeking volume or it's building volume. You can see here, it's not only building volume by way of this reversal structure, it's also potentially tapping into some volume, okay? So what I'll be looking for from this pair today is the following. Once a wick appears as a wick on all time frames, then that is likely just volatility. And if you look at the time, 1300 hours, that's when some red flag data came out from the United States. So what I'll be looking for from this pair is the following. I'll be looking for price to tap into this low, this sharp move there, followed by a push up. In this instance, I'll be looking for, because we have, if I just touch on this quickly, with dollar CAD, we kind of have this, this kind of ascending nature. Okay, but with Aussie dollar, we kind of have a bit of a flat nature like that. So if price was to break down here and then we were to flag just above it, in this instance, you're kind of trading into the arse end or the back end. Do excuse my French. You're trading into the back end of all of this. Okay, so potentially you could be tagged in, tagged out, and then price rejects and moves to the downside. So what I'd be looking for price to tap into this area, an impulse up followed by correction above all of these lows. Okay, so that would then, the correction afterwards would confirm that this is not a retest of this area to go short. Okay, and that this is likely just the bigger players. Price did not find enough volume here for it to retest and move to the downside, and that would imply that this is just the banks and the bigger players stacking their orders for the next wave to the upside, and then I'll be able to manage it up to these highs for something in the region of 3 to 4%. Okay, as I said, I'm not sure this is likely by the end of the day, but it would only take 2 or 3 candles to take us down to this area, and then it could be all systems go. So we have to stay sharp. So that is That is Aussie dollar. So let's move on to the last of my pairs. This looks slightly more likely in my opinion, but we shall see what happens. Okay, so this is dollar yen. One of the reasons this is lower down on the list is because if we just zoom out, we have, now I'll be looking to get short on this pair. We have an all-time high here, or certainly according to my data at least. Okay, on other data, I can only go back so far. There may be other highs. I'm sure I saw that on somebody else's data. But regardless, we've tapped into this significant high here. As I said previously, normally we would break above before moving to the downside. So if I am looking to get short, that is a factor in my thinking, the fact that we didn't break the high. So because we didn't break the high, there's always a chance that we may move to the upside to break the high before selling off, which means that any short trades beneath this all-time high carry a little bit more risk, especially. So at the moment, at least, it looks like price is just, if we are moving to the downside, price is filling this bullish wick. We have that candle again. Look, this bullish candle with a big wick above it. If we are moving to the downside, then price is likely just filling that wick. Okay, we also have to factor in the sequence. So if I just zoom down, look at these sharp pullbacks. We often see these sharp pullbacks if we're going to break a high. Okay, so these sharp pullbacks are also in keeping with the fact that this could break out to the upside to tap into that high before selling off, right? And there's the other thing to factor in is that we have this sharp move down here followed by a sharp move up, implying that there was liquidity here, and we tap into that area by way of a reversal structure. Okay, so there's also that. There's also that to factor in. This could be a reversal structure, and then this could be some kind of bull flag which taps into that low to push higher, and that would actually be proportionate to this impulse up which has preceded it, and then this ends up building enough volume to break to the upside to tap into those all-time highs. But that doesn't mean to say that there's not some profit potential which could be made to the downside in the meantime. So notice that we have an area of volume. With that in mind, we have an area of volume there which caused a very sharp sell-off, implying that there's a lot of liquidity here. Okay, what happens then? We then come back up to the area, but we wick to the area, not through it, and we do so by way of a bullish wick. Again, we have this bullish candle with a big wick above it. What does price do? It scoops back up, implying that this is just the second touch which breaks above here, first touch, and then potentially this is the third touch. So we end up with that 1, 2, 3, where the second touch only wicks to the area, and if we actually just zoom, and the third touch actually breaks above that area and perhaps taps into a little bit of this sharp hook point as well before that move to the downside. So once again, we have that kind of, I'm just being mindful of the time, we have that kind of scoop back up. Okay, and if we really zoom in here, you can see that ever so slightly we near miss to it. It is negligible, but we narrowly miss this area. Okay, so what I'll be looking for is the following. I'll be looking for price to tap into that area of value, which we kind of wicked to and not through. I'll be looking for that subsequent pushback down on the flag to confirm the move. And then I'll be able to manage it down, even just down to this low, for something in the region of 10%. And that is where I would use the mechanical management system. I would measure the range from here to here. I would set a take profit at the 90% mark, which is where we often see deeper pullbacks and these FOMO moves to the upside. And I would also be trailing my stop at the same time. And then even if that bull flag, which I was talking about, even if that bull flag, which I was talking about a moment ago, was to form, so we ended up rejecting from there and then pushing up to break those all-time highs, I would still be able to capitalize on this move. And then on the 4-hour chart, we just zoom in, the 4-hour chart, that would look, as I said, the 4-hour chart is very intentional. Look what that would look like on the 4-hour chart. I think that would open the floodgates once again for a move to the downside. But we shall see. We don't know what's going to happen as traders, regardless of what people will tell you. People will tell you they know what's going to happen next, which implies that they know what every single other market participant is going to do and exactly when they're going to do it, which is kind of laughable when given that many of these traders themselves don't even know what they're going to do until the moment that they actually do it. Okay, so that is the thought process. That's what I'm going to be looking for, folks. I hope you've enjoyed this video, and I will see you again in the next one. Thanks for watching.